Hello class, this is Brian from financialtrainingschool.com and welcome to BO203 Part 1 Introduction to Trendlines. So basically at this point we are now in step 2 out of 3 steps for learning price action techniques. So in step 1 we learned support resistance levels, so that was BO202, split into 3 parts. If you haven't already, you should watch those 3 parts. And for those of you that have watched those 3 parts, congratulations for having endured over 2.5 hours worth of support resistance level chart examples, the introduction to theory, and all that stuff. So now we're moving on to trend lines. So trend lines, it's technically independent of support resistance levels, but it does build on some of the concepts from before. So if you haven't already done so, you should watch BO202 prior to watching this video. And for those of you that have watched it, I suspect that in the future you will be re-watching BO202 to get anything that you missed. So basically at this point, we are continuing where we left off in BO202 Part 3, and as I mentioned in that video, SR levels aren't adept for trends, which is why I was kind of struggling in that video to show you guys how to use it. Although you can use it if you just use the whole, if price breaks support, it goes down. As it comes back up, it will be used as resistance later on. So in that sense, you can still use support resistance levels, and they are universal, but they're not adept for trends. So they won't be used here unless they're part of a pattern formation or a breakout condition. Otherwise, in all of the parts in trend lines, I intend to only use the trend line drawing tool. So basically, trend lines are the prime tool for drawing trending markets, because you can show exactly where the channel is, if it's going down or if it's going up, and basically they're only to be used once the market is actually trending. The transition between ranging to trending market requires prior knowledge from BO2 to SR levels, because you need to draw your support resistance levels in order to know what levels have to break, and then once they break those levels, it becomes a breakout condition, and then once it breaks out, it might turn into a trend or it might turn into another range. So that will determine how you trade these. In addition, you should also watch BO106 chart timeframes and BO201 Fibonacci retracements, as these will come in handy. And you'll notice basically everything from SR levels carries over to trend lines very nicely, because how SR levels function, how the support bounces up, resistance bounces down, the rows in a range, so price bounces between the levels, or what happens when they break. Everything that you learn there carries over directly to trend lines, except now basically we have different words for different things in different places. You'll see for the slides as we move along, they're basically the exact same slides as before, except I just switched a few words. So for the function of trend lines, this is a recap from GT202, just like before. Trend lines, like support resistance levels, enclose the price, except now we're not in a horizontal channel anymore, we're in either an upward or downward channel. So price will bounce upwards off of the lower trend line, and the acronym for this is LTL, and price will bounce downwards off of higher trend lines, denoted HTL. So depending on the slide or depending on where I'm talking in the chart examples or whatever, I may use these acronyms. Not likely, because it's kind of weird to say LTL and HTL. It's easier for me just to say lower trend line and higher trend line. But in case I use them, that's what they're called. So basically, when you're drawing trend lines, it's exactly the same as when you're drawing support resistance levels, except you're not drawing horizontal lines, you're drawing a trend line, which is just connecting the dots in an upward channel or downward channel. So then you have unconfirmed touches, which are the absolute highs and lows. I'll demonstrate this shortly. These unconfirmed levels, unlike support resistance levels where you just draw a horizontal line on the level, here you can't really draw a trend line because it's only one dot. If you think about it, you can't really connect one dot to anything. You can't connect it to itself, but you need to connect to something else. So basically how you draw these unconfirmed levels is, once you draw your downward or upward channel, you create a parallel line, you drag that to the point of the unconfirmed touch, and that's the absolute high and low, which is the outer edge of your channel. And that's basically how those are drawn, which I will demonstrate shortly. Then you have your confirmed touches, which means you have 2 or more bounces. So this is essentially just connecting the dots. You have one dot here and then a higher dot up there. You connect the dots, you get a trend line. Done. Once your trend lines are drawn, you break it down into probability zones. so that, like before, you only trade in the high probability zones. You don't bother trading with low probability zones, aka the coin flip trades in the no man's land, i.e. in the middle of the channel. If it's going up and down, it's going to bounce at the top and bounce at the bottom. Why would you bother in the middle? In the middle, it could either go up or down, so you don't bother. Same as before. Then also, once trend lines are broken, when price retraces back, their roles are reversed. I.e., previously you had a lower trend line, which is a bounce up. Now, as it breaks down and it comes back up, that usually becomes a higher trend line, and it should bounce down afterwards. As for chart type and time frames, as I outlined previously in BO202, I will continue to use free stock charts here for the chart examples, and will utilize candlestick charts. You can also follow the same rules for time frames as well. However, trending markets are usually best viewed zoomed out, and this is the case for most charting platforms. If you zoom out all the way, your candlestick will look like a bar chart. Thus, you should zoom out to the point right before it turns into a bar chart and still resembles a candlestick. And I will demonstrate this. In addition, regardless of what charting platform you use, you should modify the trend line drawing tool to extend left and right if possible. So for free stock charts, what you do is you click on the trend line, edit, and then once that menu pops up, check off the extend left and extend right button, and then pick the color for what you want the extension color to be. You can pick a different color if you want, but for me, usually what I do is I just pick the same color as the trend line. Then for MT4, the closest that you can get is a ray, which means it only extends to the right. It doesn't extend both ways. So what you do is you double click on the trend line, you right click, go to properties. Under properties, you'll get a pop-up menu, and then under the tab parameters, check off ray, and you will extend it to the right. So now I'm going to go to MT4 first to show you guys what I mean by zooming out and how to modify the ray option, and then I'll move on to free stock charts to show you guys how to draw the tools there and how far out to zoom out, and then I'll walk you guys briefly how to draw trend lines. So this is the MT4 chart. This is the Euro USD 5-minute chart, and this, as you can see, it's zoomed in all the way basically. So basically you want to zoom out to the point right before it looks like a bar chart. So if you zoom out, zoom out, zoom out, zoom out, here it looks like a bar chart, right? So I want to zoom in 1 point past this or before this basically, so that it looks like this. So this is as far out as you want to zoom out. If you zoom out again, it becomes a bar chart. You don't want that. You want it to look like a candlestick. So this is the last point basically. And once you have the trend line tool selected, what you want to do is you want to connect two dots. So for example, 2 points like this, so that this is basically the first bounce of your trend. And so normally if you leave it like this, you would have to keep extending it by yourself, and that's a pain. So what you want to do is you want to select it. So double click, then right click, trend line properties. This will pop up, and you go to parameters, click ray, click OK, and you'll see it extends upwards. So that you see here, this is the bounce point. In the future, if you had to extend this by hand, you would do that over and over as time went by. But if you just have it extended automatically, you know when to place the next bounce point. Also, the other thing to note, you will be using parallel lines here. So to create a parallel line in MT4, basically I outlined this in the GT series, one of the videos. I forget which course it was, but one of the videos I have how to use MT4, and basically I show you guys how to create a parallel line there. But basically how you do this is first thing you select your trend line, press Control on your keyboard, hold it, and then click on your selected trend line to create a parallel line, so that you can create where the upper channel would be. This would be the higher trend line, and this is the lower trend line. And that's basically how MT4 works. Now I will be moving on to free stock charts. So this is the 5-minute chart on free stock charts. As you can see, I have it zoomed out to about 13 hours right now. So I said between 12 to 24 hours is good. So if you zoomed out to 24 hours, it would look something like this. So this is, you can still see what a candlestick looks like. You can see where the overall market looks like. You see there's a slight range here, or a flat, slightly upward channel, basically. So if you draw trend lines, so for something, say something like connecting like that, and something connecting like this, you can see it's upwards, but it's still relatively flat. It's a flat would be something like that. So this is only about a slight small degree, versus this is a big trend here. So this is 24 hours. If you want to zoom out past this to the point where it looks like a bar chart, it's kind of harder on free stock charts since their detail is better than MT4. zooming out to about right there. This is a bar chart, so this is, I think this is 48 hours now at this point. So basically zooming in 1 point past this would be like that, so that would probably be about 36 hours, something like that, in that time frame. 36 hours. It's kind of hard to see candlesticks, so I would advise you not to zoom out this far. Up to a day should be good. So, but for the sake of this video, we'll just be using 12 hours, so like that. So let's say for drawing trend lines, I'm just, instead of connecting the bottom, we're going to connect the top now. So let's say we connect something like this, right? So this peak to that peak, this is a trend line. Since this is free stock charts, the trend line is always selected. All you have to do is click on it, left click, edit. You want to extend it. I want to pick the same color, otherwise you can pick blue if you want. So let's say you pick blue, you click extend left and right, that's the extension colors, so that you know where your extension is and you know where the actual trend line that you connected is. So, or you can pick like pink or whatever. I'm just going to pick black so that we know that it's just easier. Time of reference for me. As you can see from these two highs here, you can see a trade point up there and a trade point here and here. So those are potential trade points, which you wouldn't see if you had to draw it manually with this part only. So now what we want to do is create a parallel line. So unlike MT4, you don't have to press Control here. You just click on it, create parallel line. It creates another one, and then you can drag this to whatever point you want, to wherever you see fit. So say something like there would be okay. Right, connecting there to, you know, say that low, and then see here at this point this is a high, an absolute high or absolute low. This is the unconfirmed touch, so you draw one there, and then you notice it doesn't really show up until there. So now you might want to draw another one, say touching this one, this red right there, because that's another level which actually has touches up there. So this just shows you how you can possibly create channels by using parallel lines, because parallel lines is basically how it works. You just have one, this is where the bulk of the channel is, and then it starts breaking, but then it's still inside here, and then really starts breaking here, and then this becomes resistance, right? See, previously it would bounce up from here, slightly here, and then here it becomes resistance, and then it goes back down. Then it forms another channel. As soon as it breaks down, you start drawing your support resistance levels, and etc., etc. And on that note, if you were to use support resistance levels here, it's kind of hard to trade, because support resistance levels, you would basically, from this previous range, you would have a high there, and these would be your support, which was a call. And then as you go higher, you would draw a resistance point there, for example, so that here becomes support. So you would get additional trades if you combine the two strategies, but in this video, like I mentioned previously, I will solely use trend lines unless I need support resistance levels for breakout conditions or pattern formations. And then basically as soon as the trend line breaks, you need to change your mindset. So now you look at previous highs and you start connecting those ones. So something like this, connecting it. And something I forgot to mention, since we didn't set it as default, you should set it as default so that it all automatically extends from now on. So set as default so that you extend it like that. And let's just create a parallel line. So that's something like that. And you know, you just have to keep adapting as you find new channels, you form new ones. So that, see here, you had a big one, then it becomes a small channel, etc., etc. This will all be covered in part 2, which is the meat of this lesson, which is where all the chart examples will be. Part 2 will be covering spikes and trending markets. So that will be produced either tonight, or tomorrow, because I don't know if the microphone is picking this up, but I actually have a cold right now, so my voice is kind of gone, and I have a sore throat too, so I can't talk for that long before I start coughing and sneezing. So that's it for this video. That's it for the introduction. As usual, my recommended brokers are 24 Option, Bank to Binary, and Trade Rush. Make sure you guys use my link so that you can get an hour of tutoring with me. Full details can be found at ftstutor.com. So that's it. Hope you guys enjoyed this, and I will see you guys in the next part.